Let's take a look at the business and economic stories to watch for in the week ahead. On Tuesday, we get the latest read on consumer confidence in the U.S. The Conference Board's index fell sharply in January to its lowest reading since 2014. And on Wednesday, the Japan Department Stores Association announces January sales figures. The year-on-year growth rate in December turned negative for the first time in 5 months. Overall sales of tax-free items were down 17%. The association says Chinese customer numbers and spending both nosedived around 40% year-on-year. That's after Beijing advised its citizens to avoid travel to Japan. Kanda Keiji is a senior economist at the Daiwa Institute of Research. He thinks the soured relationship between the two countries will continue to drag on Japanese retailers.
Back in 2010 and 2012, Japan-China relations deteriorated and led to significant drops in the number of Chinese visitors. They roughly halved at one point, then gradually recovered over the course of more than a year. This time, the situation is similar. The number has already fallen nearly 50% in December. Major Chinese airlines have also extended the period for free cancellation of tickets to Japan until October, so the negative impacts may last longer than in the past.
At the same time, Kanda says domestic factors like higher year-end bonuses and the recent stock market boom will help push up consumption.
Inflation has somewhat eased, which may help boost consumer sentiment. We can expect to see an increase in spending on big-ticket items, and that may lift department store sales. But personal consumption trends tend to shift slowly. Domestic consumption may not accelerate quickly enough to make up for the sharp dent to sales from inbound travelers.
Kanda expects the number of Chinese visitors to fall by about 4 million people in 2026. That could push down consumption in Japan by about $4.6 billion.
The Japanese economy is on a moderate recovery track, but its annual growth rate is unlikely to reach 1% in 2026. Against this backdrop, a large decline in Chinese visitor numbers could shave 0.1 to 0.2 percentage points off GDP growth. The impact from a decline of more than 0.1 on a growth rate that's lower than 1% would be relatively large.
China is celebrating its Lunar New Year holidays through Monday. During the same period last year, Japan was the #1 destination for Chinese people traveling abroad. But this time around, it didn't even make the top 10. I'm Yanaka Marie, and that wraps it up for this week's BizPix.